Hello, everyone, and welcome to another edition of Real Estate Investing with Marco, powered and sponsored by HomeRiver Group. Exciting time today. We do have a couple guests. And before I get into introducing our guests, I do want to just welcome everyone here to the webinar about new build rental homes, what every investor should know. And of course, I'm your host, Marco Walker. I am very, very excited for us to introduce our guest from the Lennar Marketplace. But first, I do want to share some really big news from this year that Home River Group and Pure Property Management have merged and will soon be operating as Pure Home River. Right, very exciting. So combined, Pure Home River will operate as the nation's largest third-party property management company for SFRs with 80 plus offices servicing 35 plus states. The vision is making rental and investing simple, smart, and more satisfying. For now, you're still seeing our communications as Home River Group as we prepare to launch soon as Pure Home River. So let me introduce our guest. I will toss it over to Mr. Nathan Williams, and then he will introduce Davis and tell us what he's here for.
Great. Thanks, Marco, and great to meet everybody here. So Nate Williams, Davis Moore, we're the two single-family build-to-rent team at Lennar. Many of you are probably familiar with Lennar, but Lennar was established in 1954 in Florida. That's where our roots are. But as you can see now on that map, Lennar's in over 30 states now at this point, 90 plus markets. A lot of times a top or a top three builder in many of those MSAs. We've built over 1.5 million new homes now as a company. And Davis and I are in this role now for coming up on almost 8 years, managing the single family build to rent for the company. It's our job to help investors find the right properties across the Lennar ecosystem and make sure that investment goes well. Great to be here.
Absolutely. Great stuff. So let's jump right in. Big picture, and Nate, I'll toss this to you. So let's zoom out first from a macro standpoint, housing shortage, affordability challenges, and of course, the resilient job market. How does these factors support the long-term outlook for new construction, single family rentals?
Yeah. So depending on what data source you use, what influencer you listen to, what commentator you subscribe to, there's a shortage of 2 to 5 million homes in our country. That is a significant shortage that's not going to be made up anytime soon, and that really creates long-term demand for rentals. And Lennar's doing its part to contribute towards that adding of supply, but there is a long runway ahead of us to make that up. The other thing is we're against the backdrop where mortgage rates are still high. Home prices continue to make homeownership a struggle for many American families. So, renting has been a more attainable solution for some households. There's also just a renter by choice demographic that is a growing part of the rental ecosystem that is particularly drawn to new build. So we think the affordability challenge does create more demand for rental. And then there's just the job market itself. Obviously, it was a loss of jobs this last month. But if you take a step back overall in the macro context, looking back decades, we're still ahead of pre-pandemic norms in terms of the unemployment rate. There's been more kind of headline big company names with maybe job cuts, but not really spreading across the entire economy in the way that economists would be concerned about. So we think that continued resilient job market will underpin long-term demand for the sector.
Absolutely. Absolutely. You kind of touched on this a little bit. We'll dig in a little bit more. Occupancy and rent growth. We've seen rent growth normalize, but occupancy remains, pretty high. What does that signal to investors about the health of the SFR asset class?
Yeah, it really has been a compared to other asset classes in real estate, single family rental has really sustained that mid 90s occupancy rate. You listen to some of the earnings calls of the single family rental REITs like an Invitation Homes or American Homes for Rent. They're showing occupancy of 96% plus. I think that
Wow.
really shows the long term demand for the space, that single family rental is really servicing a need in the housing market. And is really that occupancy rate would be the envy of many other real estate asset classes, even within multifamily. You compare single family to multifamily. Rent growth is interesting. We're not in the double digit growth where we were a couple of years ago in the post COVID boom, but that really wasn't sustainable. I'm not sure we could remain in that place and not create other challenges for American consumers. So we're really in a more normalized kind of low single digit rent growth environment, which is a sustainable place to be. Renewals remain strong, and that rent growth is interesting. It's not just the Southeast. It's really broad. You're seeing the Midwest, Northeast be some of the highest rent growth areas where maybe they had been laggards in the past. So you're seeing a good broad geographic demand.
Absolutely. Definitely experienced that time of the double digit rent growth from my time at First Key Homes some years back. So completely understanding how the environment, has changed from a rental standpoint. So Davis, as we were prepping for this webinar, you were very, very passionate about, just new construction, et cetera. So I want to toss this question to you. Investor profile shifts, right? So are you seeing new types of investors enter the new construction SFR space? For example, traditional existing resale home investors diversifying their portfolios into new construction.
Yeah, I think definitely. And that's one example that you gave right there of those that, maybe have been in the single family rental space historically and maybe been more focused on existing homes, maybe older homes where there's been, an opportunity to, rehab the home and then rent it out. But I think increasingly it makes more and more sense to look at new construction that's turnkey, that has, really all the bells and whistles that renters are looking for these days. And it's a great diversification tool within your SFR portfolio. To where you know kind of what repair and maintenance is likely going to look like. You've got a warranty that's coming with the home, so the level of certainty is pretty high in terms of the operating expenses. And then also just the appeal that has to renters is something that we see being pretty attractive to investors these days. So, I think we definitely see those that are looking to diversify into the space in that regard. I think we also see, those that are looking to get into the game maybe for the first time. It's a really nice entry point because of that reduced risk in that regard. So I think that it makes a lot of sense for those that are looking to get into the space for the first time. And then the other scenario that's interesting is, you think about someone that is maybe, looking to diversify into a new market that they haven't been in before. And again, you start to look at, the benefits of new construction, and how does that help you, enter a new market that maybe you're not quite as familiar with, in particular with, property management partner like HomeRiver Group, that can give you that peace of mind knowing this is going to be professionally managed, the home is in good shape. So a lot of different scenarios where it can really make sense, and we're seeing that certainly be of interest to a lot of investors.
Absolutely. And you touched on several points that we're going to definitely layer and get more in detail. So I love it. This is getting exciting. So price positioning, and Nate, I'll toss this one to you, right? We hear a lot about structural housing shortage in the US. How does Lennar determine where to deploy capital and build new communities? Also, what data or signals tell you a market is ready for new housing supply?
Yeah, it's a good question. It's actually, as you know, something we talked about leading up to this call. I think it's an important point to make for investors. These are not just scattered site homes, resale homes. These are communities that Lennar has made substantial investments into. We've looked at this land off sometimes for years, identifying parcels in certain metro areas that we think make sense as path of growth locations. You skate where the puck's going. And Lara's gotten really good at doing that over the decades where to get to where we are as a company. We're looking at population growth, job growth. We're looking at infrastructure growth. If they're bringing major highways in or connecting routes to the major metro centers, if there are major employment announcements that are driving new jobs to the area, if there's an anchor grocery retail that's coming in, all of those are really boots on the ground knowledge that our divisions have from their years of experience looking at land. A lot of our divisions have every parcel, vacant parcel in their metro area identified as a potential deal for them. And it may not be ready for them, may not be zoned yet, and the owner may not be ready to sell, but they've identified that as a place they want to be. So when those opportunities come up, they pounce on them. And we're then in the areas that we think are the best for that metro area. So how that flows through then to an investor is Lennar's put their money where their mouth is. We've identified the right locations with the right combination of demographics, school score, crime score, income, population growth. We've diligenced the site in terms of looking at the soil conditions, doing environmental reports. We've taken it through zoning. We know this is the place we want to be. And then investors get to join us in that journey and picking locations that are high quality. And then really the marketplace, which I know we're going to talk about later, is our tool then help investors take what we think are good land locations and identify the ones that are right for rentals in particular.
I love it. I love it. And I'm smiling because I love what you said, skate where the puck's going. All I could think about was Mighty Ducks. It's one of my favorite movies, favorite series. That's all I could think about, man. So absolutely love that. Davis, I almost feel like you have some type of construction job on the side. You talk a lot about efficiencies, talk a lot about maintenance in our pre conversation. So I want to toss this question to you, which is really centered around maintenance and operating cost. So let's talk about operating efficiency. So why do new homes tend to offer lower maintenance and operating costs compared to older inventory?
Yes, I mean at its simplest, you look at what are you going to need to repair in the first couple years for a new home, right? You've got brand new appliances, kind of everything from top to bottom is brand new, typically energy efficient, and really modern and set up to endure, right? So you've got that, compared to, an existing home where you're going to have scenarios where you've obviously got some major repairs to do, a new roof, hot water heater, all these kind of things that, have a shelf life that, in a new home, you just don't have that. The other thing I would say, embedded in that certainly is the warranty that's going to cover, major items as well. But then you even start to look at things like, the energy efficiency of the home and the code that it is built towards today compared to, years ago when homes were constructed. And so, that can really lead to ongoing, operating efficiencies as well, in terms of, what it costs to actually, live in and maintain the home long term.
Good stuff. And you really spoke to the next question around risk mitigation. So I'll kind of tailor it back to, for renters, right? What's designed for renters and what they look for, et cetera. So today's consumers, in general, whether you're a renter or you're a buyer, today's consumers expect modern layouts, smart home tech, energy efficiency. How important is rentability in today's new construction SFR market? And that goes to you, Davis.
Yeah, I think like you said, whether you're a end buyer or a renter, probably looking for pretty much the same set of things, like you mentioned there. You want it to be a layout that's conducive to your current lifestyle. You want to have new and updated, appliances and, kind of all the modern finishes, that you would want, whether you're buying the home or renting the home. And so that is obviously what Lennar is building towards, and all of our, we have our architectural teams and the way that we design and build homes is very much engineered to say how can we best meet consumers exactly where they're looking to be in the most cost efficient way possible. Um, So that's really a big part of our business is making sure that we design and build homes exactly in that way. And so we think that really benefits renters as well in this scenario when a home ends up going to an investor.
I would say too,
Absolutely.
just to add on top of that, a lot of the household formation is happening later, right? People are buying a home later. People are choosing to rent, and oftentimes in apartments. And then there's the step in between, which could be single family rental, which is on their path to home ownership. So if people are coming from a Class A apartment in downtown area and they're used to, new appliances, nice amenities, 9 foot ceilings, it's a big shift for some to go to a 1950s home or a 1920s home that's got a radiator. This is a easier step for that segment in particular. It's an easier transition. Feels like something familiar. There's a lot of households coming from apartments into single family rentals as their next stop, either for renter by choice or on their path to home ownership. So I think this is a natural transition. Again, as someone's looking at a portfolio, maybe it's not all new construction, but being able to at least service that customer with your new construction allocation within your portfolio, I think is a really smart play.
Absolutely. Um, this next question really stood out to me as we really started our relationship some months back. I think I gave you guys some really hard questions and questions in general around the investor marketplace and just where Lennar was headed with this initiative. So Lennar is widely recognized as one of the nation's largest production builders, historically focused on serving first-time homebuyers. So, what prompted Lennar to create the investor marketplace platform, Nate?
Yeah, I think there's a couple things. Just taking a step back, new homes have always been historically priced at a premium to existing homes. I think the average over the last 6 decades has been about a 16% premium new to existing. Really, for the first time in modern history, new homes are now cheaper than existing homes. That's a unique opportunity, and those moments of parity have typically been short lived. So Davis and I took a step back and we thought there's some really compelling new home SFR opportunities here. And 90 plus percent of ownership of single family rentals is your everyday investor, one, five, 10 homes. And we wanted a tool to better engage with those investors. Many of them have already bought from Lennar and already longstanding customers. So it's not that we didn't already have ways of engaging with them. We just wanted to layer on an even simpler tool to make it an all-in-one solution. For example, if you look at rental comps, that's a hard thing for some people to find. They have to go into Zillow and a bunch of hot pads and pull these different comps. Well, maybe they don't know what it was rented for at the end of the day historically in that area. So we went ahead and created this marketplace. You can see the screenshot here that creates a card, like a property card for each home. Within what you can click to the home, and it has tabs that give you everything you'd want to know about that home. It has a pro forma that's pre-loaded with rent assumptions that Davis and I can get into later and how we get to that specific rent assumption. But other reasonable pro forma assumptions that you would need to evaluate the property. There's the rental comps themselves, which we have access to just about every MLS in the country, as well as institutional owner websites, Hotpad, Zillow, all of those data feeds are feeding into the rental comps that you can look at for the specific home. There's demographic information, there's area insights. So you can get smart about that. We felt like all that information existed, but fragmented. It was all over the place in someone's research. So if we could bring that all into one place to help people efficiently evaluate the opportunity, that'd be a value add. And then really layer in all the support services so it becomes very easy to actually go ahead and purchase that home. We obviously, as you see here, we have a interest rate promote by our Lennar Mortgage, which is an affiliated company, to help on the financing. There's a tab there, the resources tab, which provides information on the select property managers that we've identified across the country, HomeRiver being one of them. And we even negotiated special rates for our investors. So they get kind of preferential pricing because of the Lennar relationship. They can choose to manage this from afar. They can manage it themselves. Whatever their situation is, we're trying to bring all those solutions to one place. We have insurance, we have title, which makes it a one-stop shop for an investor.
Absolutely. And that leads into really my next question. And Davis, I'll toss this one to you. Lennar's built over 1.5 million homes and operates in 30 plus states, 90 plus markets. Of course, you guys have an everything's included type of model, if you will, for retail. So, how does that scale benefit investors? But also, why is that particularly attractive for rental investors?
Yeah, I think the scale really can help in a few ways. Number one, some of what Nate was just touching on there in terms of the ability for us to serve as an all-in-one solution and a one-stop shop for you. Really, that is the result of scale. So I think that's kind of one way. I think another thing is even as you saw, briefly on that map there, we're all over the country. So, really, nearly all the large MSAs we have a presence in, 90 plus. So wherever you're looking to invest in a home, there's a very strong chance that we have, opportunities there for you. So I think that as investors look to continue to grow and scale their portfolio, I think there's real benefit to saying you've got a partner when you know how to transact with us, that you can grow with and expand both within an existing MSA and then in other parts of the country. So I think some of those things will be really helpful. And then yeah, in terms of knowing how to transact with us, like you mentioned, our everything's included package. You know that when you buy the home from us, it's really going to have the key things that you need. Some other builders, you're going to have to go in and kind of, you know, make a bunch of different adder selections and kind of get it to a point where it's actually rent ready. Our goal is to, provide homes that are really rent ready for you. So you can just kind of turnkey and ready to go ahead and get a tenant in there. So, yeah, probably a handful of ways there that, that all adds up to hopefully a more simplified process for investors and then an ability to, kind of have a long-term partnership.
Absolutely. Nate spoke to the investor marketplace and just the transparency from a data perspective that's available to investors of all experience and all sizes, whether it's the rate estimates, comps, demographics, rent assumptions, etc. Um, One thing that you guys touched on, or Nate touched on as well, was the cap rates and the visibility around that. So you display estimated cap rates directly on your platform.
Mhm.
How should investors interpret those numbers responsibly?
Yeah, I think what you'll see there as you drill into a home and you look at the pro forma. Um, that's the first place you want to look to understand the context of what is being underwritten and what are the assumptions that are driving that as a starting point. And what you'll see is it's all configurable. So everything from the rent to your financing solution to your operating assumptions and expenses and your property management fees, all of those are items that you right there in the pro forma on the platform can fine tune and tailor to however it is that you plan to operate the home. Now, what we provide as a starting point is what we think are kind of middle of the road assumptions that are, probably pretty safe. You can get more aggressive or less aggressive depending upon your approach and the way that you manage your portfolios. But everything is right there. It's meant to be very transparent, and instead of having, go off to the side in Excel to come up with, your cap rate, your cash on cash, your total returns, we just want to put it all right there. And in particular, a couple of the biggest assumptions in there that, are definitely worthwhile to understand. One of those being, as Nate mentioned, what is the expected rent of a home? And, as we were thinking through this marketplace, and as we were just kind of starting off down this journey, it was one of the things for us, even as we look at homes, like it's challenging, right? Unless you have, really, kind of, I call it, institutional level or, investment grade tools to say with confidence, what do I think this home is going to rent for without having to go into Zillow and, kind of onesie twosie pick off some homes. And what if that's not representative of what's really been going on in the market? So the rental number that we provide there is based on an algorithm that is running, and it's saying, let's look at all the rental comps in the immediate area. that have closed rent recently for homes that are similar to the one that is in question here, particularly weighted towards new construction. So again, it is something that certainly investors should look at and then, review the comps that are there in that comps tab and see for themselves, do they agree with the projection or do they want to fine tune that further? But we wanted to give this a really good starting point for investors so that you at least have something to work off of and you're not just staring at a blank slate.
Makes sense. Makes sense. Nate, I'm sure you would agree that real estate, the business that we're all in here, is the relationship business. And, something I've always said is, it starts with the relationship, and then from that relationship comes partnership. So you guys have focused on national partnerships like with Home River Group. So you've integrated property management options directly into your platform. Why was that important for out of state or passive investors? Why is that important?
Yeah, I would say one of the top two or three feedback items we got when we kind of ran a focus group with our retail investors was what are your needs? And this property management solution was near the top. There's a lot of people in other states that want to buy in another location, and they need it to be just a turnkey solution that's really low stress, low maintenance, just sit on the cash flow, and that's what we wanted to solve for. We think obviously on the home itself, we're solving for that with this everything included package. So you have a rent ready home day one, you got the warranty, you have the peace of mind with the home itself, but you still need to get a lease. So we felt like if we could solve that problem and give them a preferred partner like Home River that can just take care of the actual day-to-day management, then it becomes a more passive investment for that owner. And we think that really, based on what we've learned from the our investment research, is that that's a real need, and that really registers with investors.
Love it. So with this next question, investor types, right? So I'll be the first to say, man, I want the American dream, right? Which is home ownership, property ownership, having assets, etc. But I'm a little guy. I'm a little guy. So, with that being said, who is the ideal investor for Lennar Investor Marketplace? Because when you think of Lennar, it's such a big name. It doesn't, for me, as someone as a little guy, I don't know if I fit, right? So, is it first time SFR investors, portfolio operators, institutional investors, 1031 exchange buyers? What is that investor type that's ideal for this marketplace?
Sure. I mean, you're right. Lennar's a big company. We'll do 80,000 homes a year, but we sell them to tens of thousands of individuals at the end of the day. Yes, we can sell to institutions. I mean, my short answer is we will work with all of those buyer types. I think it's a good fit for anybody. But I think we, with individual buyers, don't feel hesitant to reach out, and we can help you navigate a large company with a lot of homes. We actually have an investment concierge, Josh Picker, who at the end of this presentation will have his information. You can even pull up now if you want, Scott. But we have someone that's just dedicated to helping serve as a concierge for investors that maybe just want to buy one home. That's fine. 10 homes, 100 homes. We can service all of those needs and help people find the right opportunities across the Lennar ecosystem and be their advocate internally for what they're trying to do. Because we understand, obviously, the rental business model. That's what we wake up every day doing and servicing.
Perfect. This is totally awesome. I think even just layering on to the partnership, kind of not tagline, if you will, Lennar is honestly serving as a partner for investors. You're an extension of their ecosystem. And I think that's, really going to help investors propel their portfolio and scale their portfolios in the future. Process question. Everyone's on the edge of their seats. I can just see them through the screens right now, wondering how do I get involved? How do I go through the marketplace, etc. So, if someone is listening today wants to begin investing through Lennar Investor Marketplace, what does the process look like from first click to closing?
Yeah, so the marketplace is really set up so that you can be as self-serve as you want. Or as Nate mentioned, we have that concierge, Josh, who is available for any questions, both via email or via phone. But really what it would look like is going to the investor marketplace, and I think we'll have that link up at the end. And really then you can start to explore the homes that we have available on the marketplace at any point. And the idea is as you step through that process, being able to gain conviction on these are the homes or the home that I'm interested in investing in or learning about more. And the way that it will go is prior to submitting your offer, you just have to create an account, very basic name and email. And actually would encourage you to do that sooner in the process than later so that we can kind of help, tailor any kind of notifications and outreach to you based on your buying preferences. But really, it's as simple as looking at the homes that we have available, and then you can start your offer right there on the marketplace. And what that'll do when you start your offer and submit your offer is that'll then get that into the hands of both Josh, our concierge, and the local sales team at that local division at Lennar. And then from there, it'll be a conversation. And go through the rest of the sales process directly hand in hand with those sales associates. And then they'll, guide you through, once we reach, a point of going under contract and then through the closing process, it'll really all go through there. But it really, can all start with, seeing what's on the investor marketplace and starting that offer right there.
Perfect. And to build on that, Davis, next question around capital, aka the money. What's the typical capital structure investors are using today? Is it cash? Is it DSCR loans, portfolio financing? What does that look like?
Yeah, I think we kind of see it all. I think we have investors that are cash buyers. We have investors that are looking for a conventional loan through Lennar Mortgage, whether that's an ARM or a 30-year fixed or something else. We certainly have investors that are looking more for a DSCR loan to go out and secure that. So I think there's really a range. There's no wrong answer. And then, that's something that after you submit your offer or in advance, if it's a question you want to talk through, Josh can help with any questions and answers prior to submission, or after you submit an offer, it's something we can work through with our internal lending team at Lennar Mortgage, in terms of what options are available to you and how that best meet your needs.
Perfect, perfect. So, two last questions. This first one, Nate, is for you. For someone who wants to build generational wealth through real estate, what's one strategic piece of advice you'd give them?
Yeah, I'd say do your research on the right locations and be in a place that you have conviction about. Um, if you're doing it from afar, make sure you have a partner that knows that market locally that can walk alongside you and have that conviction. And then really, don't. There's a warranty, so you have a lot of that peace of mind. But I would say just continue to invest in that property. If you're sitting with Lennar as your partner for a 10-year warranty, we've done a lot of that investing alongside you. But just preserve that asset and hold on to it as long as you can, because over the long term, housing continues to goes up.
Love it, love it. And then Scott, the last question was around how do we get in contact with the Lennar team. So we'll have some contact information for everyone on this call on how to directly get in contact with their team so that you guys can start investing today. I do want to transition into our question and answer portion. We will try our best to get to every question that we can, but I'll kind of start off here. So this question is from Mark. It says, in a given community, how do you control owner occupied versus investor owned, i.e., rentals? As an investor, I would want to make sure that there is a good balance so all homes in a given community are not investor owned.
Yeah.
That's a great question, Mark. And I think there's another question Rory had asked, a similar one. If I'm seeing that in the chat here, I'd
Yeah.
be asking the same question myself. We think about those things on the Lennar side. We also are wanting that right balance, that right mix. because we're often selling hundreds of homes in these neighborhoods to individual homeowners. And we're going to hand over the HOA to the owners one day. And so we want to make sure we're setting that community up with the right mix, reflective of where we are as America, right? There's a home ownership rate that is probably a good proxy for some of these neighborhoods of where you'd have ownership versus rental, maybe even less that are rental. Some of these communities are going to have rental restrictions on terms of a cap. If it has an outright rental restriction, we're not putting it on the marketplace. So you can have peace of mind knowing that you're not looking at a community that's going to ban rentals. But even if there's not an explicit ban, we do try to be thoughtful about how much we put in there so it's not overwhelming. I've seen some other communities with other builders where there may be a whole row of for rent signs. Everybody's renting out the home there, and it could be 3 or 4 different companies. We're very thoughtful in how we do that. We even, if we get like an institutional investor and 2 investors looking at it, we'll be very thoughtful about whether we want to partner with either of them, or if we do, that we're not doing too much so that it doesn't create that situation where everybody feels like this is now flooded with rentals.
Great stuff. This question is from Miss Lisa. It says, what are the markets with the greatest housing shortage? Is it DFW? Is DFW one of those markets? If so, cities have more demand than supply. How are how are the cost of construction materials today versus in 2020 through 2024?
I'd say the housing shortage is widespread. You will see, I mean, you just look at any chart you pull up right now, it talks about where home price appreciation and where supply is. That'll probably give you the granular market by market feedback. But I look at where are you land constrained, where is it harder to build? And those are often where you have some of the greatest shortages. So you look at a California, for example, where there's a lot of there's a constraint on land and there's a lot of hurdles to get through to get deals approved. You look at the Midwest, you look at the Northeast, some of these areas that have been built out um, more than the Sun Belt markets have been historically. There's just less land left for single family development. DFW is a good market. We think there's supply in some areas and there's a shortage in others. So it starts to get very local very quickly. It's hard to say there's just one MSA that we would recommend. I think your other question on construction costs, for us, land costs continue to rise. They're not going away anytime soon. This is all stuff our executive team is saying on our earnings call. We have been able to bring vertical construction costs like the sticks and bricks down over the last year, which has been helpful to help offset some of the land cost increases, and land development costs have remained noteworthy. So we have seen some relief on the vertical construction costs, which has been good. That obviously flows through to the consumer and what we're able to then sell the home for.
Absolutely. These are really, really good questions, everyone. I'll kind of combine a question from Brian as well as a question from New So, is Lennar just offering existing new construction homes for sale? And does Lennar or will Lennar in the future have an option to build on a lot that's already purchased? So essentially, if I'm an investor and I own a lot, can I contract out to Lennar to build a Lennar product on said lot? And then combining that with New he says, does the marketplace performance show the property tax rate to ensure the property tax estimate is accurate for stabilized costs after the home gets reassessed by the respective county?
Yeah, I'm happy to take that one, Davis, and you can fill in if you feel like you need to. I would say so. And Brian, I'm getting a sense that maybe your question is, what is this product overall with the marketplace? It's really a platform for us to put our homes that we're building out to investors to select which ones they want to purchase. So we are selling Lennar homes that are typically completing within the next 30 to 60 days. So these are near-term investment opportunities that we've selected for their rental potential. But except for a California where we do a build on your lot with a company called Vive, that's a subsidiary of Lennar, that's doing kind of more of a modular type solution. Outside of that California unique situation, no, Lennar is not really doing a build on your lot program. We typically look at 40, 50 plus home communities that we can build and deliver to the market. And then in terms of the marketplace pro forma, it shows the property tax rate at what the value would be. We're putting that in the pro forma as what the purchase price of the home would be. So we're not just taking on what that lot value would be at the time of purchase, which may take a year to catch up with the actual home itself. So we're trying to load it with what the actual purchase price of the home is, and the property tax at that basis.
Good stuff. Last question. If Home River does not offer property management in a given area, do you have a network of folks or other property management companies that you can connect those investors with?
Yeah,
Yes,
we
we do.
do.
Go ahead, Dave.
Yeah, I was going to say we do. Yeah. Obviously the size and scale of Home River Group means that vast majority of markets, they're, thankfully a great partner option there. If it is a market where Home River Group isn't, you'll be able to see on that particular home, that resources tab we were talking about, what other property managers are available there. And I think we have coverage in, I don't know, 97, 98% of our Lennar markets. So odds are very high that there's at least one option for you.
It's good stuff. Scott, if you can put on the screen for contact information. Thank you everyone for your questions that you submitted today and being on the platform on the webinar with Investing with Marco. Definitely want to thank Nathan as well as Davis for your expertise on new build construction in this marketplace. So this has been really, really insightful for everyone involved. So, any closing, thoughts or remarks for you, Nate, as well as you, Davis?
No, I just say thanks for the time. We look forward to getting to know you all more, and please do visit the site like we've linked to there. Reach out to Josh. We are available, even if you're just exploring. We want to have that conversation and see how we can be a resource.
Yeah, I agree. Yeah, thanks Marco for having us on here. And yeah, the whole intent and spirit behind this is, to simplify things for investors. So if there's any way we can be of help or any, feedback or recommendations, we're all ears.
Absolutely. Well, everyone, the contact information is listed. If you guys need anything from a property management standpoint, feel free to reach out to marketing at homeriver.com or visit homeriver.com, soon to be Pure Home River, as we mentioned earlier. And then, of course, please go out there immediately after this call, visit the investor marketplace. You can go to investor-marketplace.lennar.com. Please make sure you guys go on there. It's a fun site, a lot of information at your fingertips. Thank you, everyone, for joining today, and have a wonderful day.